Yes, yes. And let's give them a minute to join.
Sure, sure. A very good evening to all our participants. We thank you for joining us on this special webinar on analyzing changes announced in the GST Council meeting jointly presented by Taxsutra and Hiregange Academy. Our speakers for today's session are Chartered Accountants, Mr. Madhukar Hiregange, Mr. Ashish Chaudhary, and Mr. Ravi Kumar Somani. Before I introduce our speakers, I would also like to thank Logitax, which is a GST compliance automation platform providing automation of GST filing and vendor management for helping us promote this event. For all those participants who are interested to know more about Logitax, kindly log in to www.logitax.in. Our first speaker, GST veteran Madhukar Hiregange, is a senior partner at Hiregange and Associates, having several offices in India, specialized in indirect taxes, FTP, and value-added audit. Sir has jointly authored 31 plus books in IDT, including GST from 1997 till date. Over the last 16 years, he is on a mission to create committed professional leaders and has encouraged and fostered 240 plus leading professionals in industry and practice to take up ethical practice in IDT. He has contributed to the nation by volunteering 6 years to the Central Council of ICAI. Our next speaker, Mr. Ashish Chaudhary, is a chartered accountant who qualified in November 2009 and comes with a meritorious academic background with an All India 27th rank in CA Final, 12th rank in CAP2, and 22nd rank in CS Final. At Hiregange and Associates LLP, he is a partner and is leading the advisory, litigation, and the audit division of the firm for the NCR region. He has been a special invitee of the Indirect Tax Committee of ICAI during 2016 to 2019 and has been a recognized faculty of ICAI for taking certification course on IDT for ICAI. Our third speaker, CA Ravi Kumar Somani, qualified as a chartered accountant in 2012. He is a partner at Hiregange and Associates LLP and currently heads the Pune branch. He practices exclusively in GST and customs, foreign trade policy. He has authored a couple of books in indirect taxes, such as Practical Guide to GST Audit and Certification, Self-Study Guide to Indirect Taxes, and Practical Guide to GST on Automobile Industry, published by Taxsutra and Bharat Law House, which is also available for sale on www.taxsutrareservoir.com. Before I hand it over to Taxsutra's group editor, Mr. Arun Giri, who shall set the context for today's session, I would like to take the opportunity to apprise you all that in the last part of the session, we will host a dedicated question and answer session. For this, you may post your queries in the Zoom Q&A chat box. With this, I now hand it over to Arun.
Thanks so much, Tanaya. At the outset, wishing all our participants, our speakers, a happy Chartered Accountants Day. Let us on this occasion, the 74th CA Day, 1949 is when the Chartered Accountant, I think the institute was established. On the eve of the 75th Independence Day, here we are. I think on behalf of everyone, I can possibly say that let's pledge to rededicate ourselves to professional excellence. That is what the alphabet CA stands for. That's the sort of trust and respect this profession has given us. Let's live up to that trust and faith that the economy and the financial markets have on chartered accountants. Congratulations and wishing everyone the very best in their professional endeavors. The GST Council meeting has ended with a lot of action, and it happened exactly on the eve of the 5th anniversary of GST. We still have 70 more years to go for completing 75 years. But in 5 years, there is enough action that could have happened in 25 years. Very honest. And I'll just give you one example, or maybe two examples. One was when the finance minister was asked about GST on casino, and she explained that the Goa minister, who had never been to a casino, actually went to the casino in Goa, and then how their different thought process evolved. You will need some tax on the chips. What if some chips are unused and returned? Then what happens to the food and drinks served in the casino? The activities for the kids in casino. So many complexities for GST on casino. Not sure finally any consensus emerged on that, but there are so many things that where we thought a lot of action would happen, but a consensus has not emerged. But yet there is enough action. A 9-page press release that was issued by the government. And second example today, someone has tweeted that you had in the last 5 years some 800 notifications, 140 circulars, or vice versa, whatever in the last 5 years. So, the way we are going, I just hope that we don't outdo the Income Tax Act in the next few years. Good and simple tax is what we were promised 5 years ago. Rather, it's a tax which is giving chartered accountants, I presume, a lot of work, lawyers a lot of work, corporates some sleepless nights. Yet, let's not forget what this tax was set up for a seamless credit, one nation, one tax. And I'm sure we've made some progress on that front. Litigation, well, India, as someone said, the favorite national sport is litigation, after cricket maybe. So litigation are plenty even before the tribunal is established. Just imagine what will happen after a month. I hand it over to one of the most renowned professionals on GST, one of the most renowned chartered accountants based in Bangalore, Mr. Madhukar Hiragange, best-selling author of several books. Madhukar sir, we all look forward to hearing from you. And then, of course, Ashish and Ravi on what transpired exactly at the GST Council meeting. Madhukar sir, over to you. Happy CA Day.
Happy CA Day to you too. It's, of course, for the people practicing indirect tax, as you said, it's like, this area is becoming a gold mine. But it also, we have to ensure, as you said, we have to rededicate to integrity, and we have to certainly rededicate to confidentiality, which is something which we need to see. And our professional ethics is very clear. We need to have fairness in dealing with the client, see that their problems are sorted out at the earliest rather than pull it along. So I think on CA Day, I would rededicate to the professional ethics, not only in word, in spirit too. And we have seen that in our firm, by following this, we have grown year after year. I'll get on to the topic because we have lots of things to discuss today. I will spend about 2-3 minutes. Part of it, I think, Arun, you started it by saying that it was supposed to be a tax which is broad-based. I think in this broad basing of taxation, even in this council meeting, they have gone a bit overboard. The items which were at nil have been brought to 18, which were at 5 being brought to 18 are all unreasonable ways of doing taxing. It has to move slowly. One more point which is very important, which you touched on, was that the objective of GST was to avoid cascading. However, we see that very little is done in that regard. One more point was, just like tax is collected automatically, everything is linked now. And if you don't pay your taxes, you can't file your return. So many restrictions, but refunds are still a bugbear. Many refunds get stuck because of administrative reasons. And this was one of the other promises which was given, that technology will not only catch the evaders, but technology will ensure that you get your refunds instantly. Now we are still taking 3 months, 6 months, sometimes it's going further also. One more point which is there is that technology was supposed to help us to ensure that the supplier pays the taxes properly. The burden of paying the the supplier's compliance cannot be put on the receiver. It is not possible. A motor company in Pune, where Arun resides, may have 20,000 clients. Are they going to take care of compliance of 20,000 clients so that they can take their ITC? It's just impossible. It's quite unfair also. Technology should have given a one-click solution, whether there is any problem with that vendor. And if it is there, then I take an appropriate measure. One area which I have been focusing on from 2016 onwards, in fact, before GST came, was training of officers, which is a fundamental requirement. Unfortunately, the officers across India have not been trained. Some sort of a tick box approach has been done, but no officer, whether in Pune or Bangalore, when I say no officer, I mean less than 2% are aware of GST. And if they are not aware of GST, how can you expect this small and medium concerns to be aware of GST? This is something which is a cause of concern. Maybe it should be taken up immediately. Especially the officers who adjudicate, the people who are in appeals. Advanced ruling authorities don't know the old settled laws of central excise, service tax, customs, which are all part of GST. You know, GST got a khichdi of all these laws. One of the other objectives of GST was dispute resolution quickly. And there was a lot of fanfare made on that, how they are going to reduce the dispute resolution. Unfortunately, the dispute resolution mechanisms have failed on all counts, almost. You still have a large amount of frivolous demands being made. Extortions by the DGGI is continuing. That means they know the law, but they'll force you, coerce you. This is not something which we expected in GST. It was there in central excise, it was there in VAT to a great extent. The advanced ruling authorities have become a cause of concern because I think they are fermenting litigation by giving contrary rulings, poor rulings without referring to settled case laws. Tribunals still to be set up. This story has been going on. They should have set up 3 years back and they're still trying to set it up. The auto escalation of cases against the department is also a cause of concern. There has to be some reasonability in escalation. Otherwise, there's no end. You know, justice denied, they say, justice delayed is justice denied. That's what is happening in GST. You follow the department circular, which is not a valid document as per Supreme Court, or you take it up to Supreme Court. So another 10 years, you keep on going. The GST Council, especially in this starting, was wonderful. I myself have been giving accolades to them. But now I have some 2-3 questions for them. Are they becoming an extended arm of the CBIC? That means the executive is working through the GST Council. States are making objections. They are overruled by saying some simple things, sometimes quite stupid, which are there in the minutes. Second, there are so many fundamental reforms required, like in ITC or even in levy, etc., which has to align to the best practices across the world. That's why GST was supposed to come. I'm not saying GST has not helped. GST has helped tremendously compared to the past. Like we had 2,000 classification entries, you might have 20 today. The best practices should be put in more. Most of the decisions which are being made in the GST Council seem to be revenue pro. Even the decisions made now, whatever the reason they give, the reason given is to remove clarity, avoid accumulation, inverted duty structure, unnecessary refund. But if you go into the fine print, if you want to have remove inverted duty structure, you make it from 5 to 12, not 5 to 18. Where it cannot be possible that all your inputs are 17%. It's not possible at all. And many of the industries where they have done this, they don't have an accumulation at all. We have not seen, at least in the 5,000 clients across India. Therefore, the 0 to 12, 18 are not acceptable. And I think it's not fair. With this, I would like to hand over to Ashish, and I will butt in whenever necessary. Thank you very much again, Tanya and Arun, for this wonderful opportunity.
Thank you, Madhukar sir. Ravi, could you project the PPT? So, I'll just directly go on to the topic of discussion. When we were hearing the finance minister after the press council, it was conveyed by finance minister that yes, this time they have taken 2 days for the meeting. And why 2 days? Because there were so many agenda items to clear out in this meeting. And the volume itself speaks from the length of the press release, wherein the press release itself runs into 9 pages. What we are going to discuss today is the finer aspect of the press release based on our understanding as to what were the underlying issues, what led council to deliberate and recommend on various aspects of these things. Some of the aspects certainly cannot be made out from the press release reading as to the changes being proposed. So for some of the things, or I would say few of the things, we would require to wait for the final notification or circular whenever it is issued by the GST Council. So one of the important aspect addressed in current council meeting was on the inverted duty structure, wherein in the inverted duty structure part, government not only increased rate for various goods and services, but also there were few changes so far as the refund pertains to the inverted duty structure. So in terms of coverage, if you look at, we'll be discussing refund and then streamlining of compliance, then few the branded and unbranded category of goods where there was a large dispute or interpretational aspect, then some of the sectoral aspect, and in the end, if the time permits, touching on the rate changes, what has been recommended in the council meeting. So coming to the first aspect of the refund, wherein as I have been discussing on the inverted duty structure refund, we all recollect that the inverted duty structure provision presently does not permit taking refund of the ITC on the input services. There was the long legal story and matter went up to Honorable Supreme Court. And the Honorable Supreme Court also took the view that yes, you cannot claim the refund of input tax credit arising on account of input service. That was the one part. But the other part, what one observation of Supreme Court in the judgment was that certainly there is some aberration in the present formula. What this aberration in the formula, what was pointed out by the Supreme Court based on the argument put forth by advocate from the applicant side was that the formula which inverted duty structure refund, in the end, there is adjustment on account of the tax paid on the inverted turnover. So the formula makes a presumption that output tax payable on supplies have been entirely discharged from the ITC accumulated on account of input goods, and there has been no utilization of input service. And so based on that, it was pointed out by the Honorable Supreme Court that GST Council should consider this aspect and a policy decision should be taken to amend the existing formula so that the aberration in the formula can be overcome. Now it appears that in this council meeting, this observation of Supreme Court probably came before the council for consideration, and based on that observation of Supreme Court, there has been a proposal to amend the formula. The language what is in the press release, that press release language does not clearly lay down as to what proposal is being made by the council. One simple line of interpretation could have been that refund is to be permitted on the input service also, because the term what they had used, that the amended provision would help taxpayers who are availing ITC on the input service also. And this part was put up in the bold in the press release. But actually that is not the case, because if we look at the entire text of the press release, and if we try to interpret the entire text of the press release, it somewhere prorates the ITC and its utilization for the purpose of tax payable on the inverted structure turnover. So how we could break out this language and the possible formula, what could be there? If we go to the next slide, if we look at present formula vis-a-vis how this revised formula could work out. Ravi, could you move to the next slide, please? So the present formula, what it reads is that maximum refund amount could be turnover of inverted rated supply multiplied by net ITC divided by adjusted total turnover minus tax payable on such inverted rated supply of goods and services. So effectively, if we look at in terms of taking input tax credit, certainly input tax credit has to be taken only on the input, and then the turnover of inverted rate supply has to be prorated with the total turnover. This has to be reduced by the tax payable on the inverted rate supply of goods and services. Now with the language what has come out in the press release, the possible formula what could be there is the turnover of inverted rated supply would be the same, multiply by net ITC divided by adjusted total turnover. Till this point there does not appear to be any change in the formula. But when we look at the next part where there was reduction of output tax on inverted rated supply, here what the council this press release recommendation, it seems that it has been prorated based on the ITC on goods divided by total ITC on goods and services. So effectively, if you look at the example, if let us say in the earlier situation where ITC on input is 60 rupees, on input service 40 rupees, so total ITC is 100 rupees. If you look at turnover of inverted duty structure where let us say it is 500 rupees, non-inverted turnover is 1000 rupees, so total turnover is 1500 rupees. Output tax on inverted turnover is 25 rupees. So if we calculate that refund as per the earlier formula, there is no refund. In fact, there is negative amount. But if you look at the as per the revised formula, there is going to be some refund admissibility because the reduction what is going to be made from the eligibility of refund amount, it has been reduced to some extent by prorating it based on the ITC on goods versus divided by total ITC. So effectively, if you look at the impact of this amendment, it is not that all the taxpayer will get benefit out of this, but wherever a taxpayer in any particular tax period, if the input tax credit on the input is higher compared to input service, so in that situation, there could be always possibility of getting the higher refund amount, or there could be possibility of getting some refund, which till now refund was not resulting based on the erstwhile formula. Effectively, yes, each taxpayer has to see its own position to find out whether actually are they getting any benefit or not. So this was the first major recommendation of the council. Now, if we touch upon some other aspect of the refund also what has been clarified in the press release. Second is that clarification has been given on issue of claiming refund under inverted duty structure where supplier is supplying goods under some concessional notification. So if you all recollect, there was a circular which was issued in 2020. And in the circular, it was clarified that if there is unutilized ITC on account of inverted rate structure, then refund will not be allowed if input and output supplies are the same and they attract different GST rate at different point of time. So there could be various instances where as a supplier, I am buying goods at a full rate, but when I'm selling the same goods in the trading business, not as a manufacturer, I might be supplying the goods under some concessional rate, under some concessional notification. Could be for some public funded organization or could be some other, maybe solar or so. There could be various other situations. So the circular was interpreted by the field officers that because the same goods are supplied, the refund should not be allowed. And the question came before the Honorable Guwahati High Court in case of BMG Informatics, where the Honorable Guwahati High Court had held that the circular, the clarification given in the circular is nowhere stemming from the section 54. So to that extent, circular does not appear to be in line with the law. And the way the language is worded in the press release, it appears that the government or the council is Now, intending to clarify that the benefit of inverted duty structure refund should be allowed in these cases also, wherever the supplier is making supply of same goods, but the outward supply is under some concessional notification. So in those cases also the refund should be allowed. And now, because this being in the nature of circular, more in the clarificatory nature, certainly it should have retrospective effect, and for the past period also, wherever refund are stuck or not filed, possibly refund can be filed for those cases also. Now moving to the next part of clarification in terms of the refund. Next slide, please. So amendment in Rule 96. So presently what is happening, we all have seen that there is a new term coined by the department is the risky exporter. Though I could not find any of such terminology in the law anywhere, but based on the data analytics generated by DGRM, department has been raising the flag of risky exporters wherever either those exporters or any of their tier 1 or tier 2 vendor have been in some non-compliance, or there have been, I would say, passing on some invalid credits. So once an exporter is flagged in the risky exporters, typically all his refunds are withheld or stopped by the department. The process of clearance from the risky exporter takes its own time and may sometime goes up to 6 months to 1 year or so. Similarly, under Rule 96, if you look at Sub-Rule 4B, there are the cases where Customs Department can withhold the refund due to any of the violation of the provisions of the customs. Now, in all these cases, question comes, how do the refund be sanctioned to the taxpayer? Because as a taxpayer, I had exported my goods on payment of tax, wherein the shipping bill filed itself is treated as refund application. Customs officer do not have access to my detailed records in terms of my inward supply, etc., and I would say eligibility of credits. Also, the customs officer are not required to do anything to remove this flag of risky exporter. Ultimately, it is done by the jurisdictional officer. So in all these cases, there has been huge blockage of working capital for the exporter. Now, what the government is proposing based on the language of the press release, that whenever such type of refund are withheld by department, there would be intimation, automated intimation from the customs to the jurisdictional GST department of the taxpayer. That intimation will automatically get done through form RFD01. Once that RFD01 form is transferred to the jurisdictional office, it would be responsibility of jurisdictional GST authority to examine the validity of refund claim and validate the regularity of input tax credit claimed by the exporter. And based on this particular thing, that refund would be granted by the jurisdictional authority instead of the customs authority. So the refund application, what was automated refund application based on the shipping bill transmission, that refund application from the customs to GST department would be auto transmitted, and it would become an application like application under Rule 89, wherein everything would be validated by the jurisdictional GST department before granting the refund. Certainly one question what we all will have to see, whether the jurisdictional GST department will also issue the refund only after removing the risky exporter tag, or whether based on the process what they follow for the Rule 89 to give the refund in LUT cases, whether by following the same process that refund would be granted. But certainly I would say to this extent that at least the system has been provided to transmit that application from the custom to GST, there appear to be an intent of giving little faster refund to the taxpayer. Now, if you look at the next clarification given in the context of the refund is, sometime what happened, I have filed refund claim, let us say under LUT or maybe inverted duty structure refund or any other refund, or maybe on IGST paid on export. Later on, it is found by department that the refund claimed was incorrect. One case could be where before refund sanction itself, department raised the question. And second cases could be where after sanctioning of the refund, then the question is raised by the department, or suo motu it is noticed by the taxpayer. Now in such situation, once the taxpayer pays that wrongly claimed refund to the department, whatever input tax credit was debited at the time of filing of refund application, there is no mechanism presently to get back that credit in the portal of the taxpayer. Now here what the press release intend to clarify, that recredit of amount in the credit ledger in cases where erroneous refund is sanctioned on account of accumulated ITC or on account of IGST paid on zero rated supply, new form GST PMT 03A is introduced for the same. So in all such cases, PMT 03A would be introduced. Through that, the amount would get credited to the ECL of the person who has claimed the refund. Next clarification, again in the context of refund, if we look at, is the Rule 89 sub Rule 1. In fact, I think this also appeared to be question raised in some of the quarters. The language in the Rule 89 where it uses is that refund can be claimed when that invoices against which supply are made are endorsed by the specified officer. In fact, we had also examined this aspect earlier also. If we go into SEZ rule, a specified officer is different from the authorized officer. Normally, typically what happens, whenever any goods or services are taken as inward in any SEZ, that endorsement is done by the authorized officer, who is normally department officer at the lower rank. Specified officers are the officer always at the higher rank. Now the rule provided that refund would be granted if it is endorsed by the specified officer, but in actual practice, all the endorsement are done by the authorized officer. So now in order to remove this ambiguity as to who should endorse it also, an explanation is intended to be inserted in Rule 89 to provide that specified officer for the purpose of 89 shall include specified officer or authorized officer as the case may be as per the SEZ rule. So effectively, whether it is endorsed either by specified officer or authorized officer, in both the cases, refund would be admissible. Another clarification in the refund is for the duty-free shop. So here again, there was a long drawn battle wherein if any international passenger is going to the international, and if he is buying anything from duty-free shop, originally a view was taken that it does not amount to export because the goods are not moving from India to a place outside India. But considering the fact that duty-free shop are beyond the customs frontier, there was a circular and notification by the board whereby it was provided that there is no GST liability on the sale by DFS. Those were covered in the exempted supplies. Along with that, they were entitled to claim refund of the goods purchased domestically. So only refund was allowed only on the input goods. Thereafter, there was judgment of 2-3 high courts, wherein the Honorable High Courts had held that the supply of goods by DFS should also be considered as zero rated supply. And once it is considered as zero rated supply, the supplier should get treatment similar to an exporter, and he should get the refund of all nature of inward supply, not only confined to the inputs. So here now the proposed amendment is to give the supply by DFS status equivalent to export of goods, so that the supplier can also claim the refund of all the input tax credit, whether on the goods or services, similar to any other exporter, maybe like LUT exporter also, so that their accumulation of ITC on input services, which was otherwise taking place or which they were not entitled to, I would say, utilize, that is going to be liquidated now. There is another clarification which cannot be made out the exact meaning, where is the ITC accumulated on export of electricity is permitted. Then some clarification are likely to be issued on the refund pertaining to the recipient of supply regarded as deemed export. Again, it is not coming out from the press release what it intends to clarify. One important, I would say, positive amendment is that time limit for claiming the refund, which we all recollect that by virtue of the Supreme Court order for time limit extension, there was this period from 1st March to 20th Feb that was excluded, but there were rejection of the refund by the department, and the Honorable High Courts have taken a view, including Madras High Court, that refund can be claimed, or this time limit should not be considered for the purpose of time limit provided under Section 54. Now here the Council itself has taken the cognizance, and this time period from 1st March 2020 to 20th Feb 2022, this time period shall not be considered for the purpose of claiming refund under Section 54. So effectively any refund which I would say otherwise would have got expired for the time period of 2 years, many of those cases have now become alive because of this extension of the time limit. At the same point of time, not only for the taxpayer but also for the department, it has been provided that time limit under Section 73 for issuance of notice against such refund order or any of the rejection order against such refund, time limit has also been extended by for the department, whereby this period shall not be considered for the purpose of issue of the notice or order by the department. Please note that the time limit under 73 for the refund cases is different vis-a-vis the time limit for the issuance of show cause notice pursuant to normal assessment. So here the time limit is normally counted from the refund sanction date. Now here that time limit would get extended by another 2 years. So we can move to the next slide. Now they have specifically provided, again reason very difficult to decipher, that they have provided that refund of accumulated ITC shall not be allowed on the supply of edible oil and coal. So these are the item under the inverted duty structure, but here like there are few other categories in the domestic supply for rail locomotives or works contract, etc., where the specific D bar has been put for claiming the refund of accumulated ITC. These two commodities have also been included in that exclusion list. Another extension has been for the benefit under advance authorization or EPCG or EOU scheme, where we all know that it was going to expire yesterday. So that time limit has again been extended. So goods can be imported under these schemes without payment of the customs duty and or IGST on the import of goods. Last part pertaining to refund and related exporter aspect, if I look at that, till now where any exporter was on the export of goods where they were getting MEIS scrip under the foreign trade policy earlier and now road tax scrip under the customs provision, these scrips are tradable in the market, but these are exempted from GST. In certain audits, or in fact there was the observation of the CAG audit also, that because these are the exempted supplies, so exporters have to reverse the input tax credit pertaining to supply of these scrips. So here what is being proposed after Rule 43 in explanation, similar to the explanation what we have presently for the interest income, etc., where even the interest income is exempted income, there is no need of reversal of input tax credit. Similarly, it is proposed to be provided that where the supplier is making supply of any duty credit scrips, even though these are not subjected to GST, but there would not be any need of reversal of input tax credit under Rule 42 and 43. So again, this is a welcome amendment. We'll have to see with the language also, because it is coming by way of explanation, whether it will have retrospective effect or prospective. What about in terms of the past cases where either not reversed at all and it is under litigation with department, or if reversed, whether refund can be claimed or so. those aspects certainly will come to know only when the actual law or the amendment in the rule is notified by the council. These were certain changes pertaining to refund. Before I hand it over to my colleague Ravi, anything from Madhukar sir, if any input Madhukar sir you want to give, else we'll move it to Ravi.
Sorry, go ahead, let Ravi finish. I'm making notes. Please go ahead.
Yes. Thank you, Ashish, for covering the refund aspects of the changes that have been made. So now in the second part, we'll be covering various aspects relating to compliances. Now, in this press release, the council decisions, what have been taken, a lot of measures have been taken to ease the compliance, and various compliance related aspects have been brought out. So we will look at those items and understand, try to decipher the impact of those changes. The first and very important aspect is, we all know that in the recent budget, this retrospective amendment has been made, wherein this interest would be applicable only on the utilized, utilized portion, not merely because the ITC is availed. And also the fact that interest would not be applicable at the rate of 24% also brought out. Now, this has not been, given effect. So this particular point which has been brought out, decision in the press release, is that this needs to be immediately given effect, so that the challenges which the assessees are facing on the ground, on the fact that since it is not effective, still department officers are actually asking interest on the ITC that is availed. So that is something, the council has brought out that needs to be expedited. Very important aspect here is that the mechanism through which this calculation of interest needs to be done would be provided by way of rules. Now, we need to wait for the rules to know what is the mechanism. But what I understand, it is a very simple, it has to be simple. But if they complicate by way of a rules, then it is going to be another Pandora box of litigation, which hopefully should not happen. Next very important aspect is transfer of balance from electronic cash ledger. This is only for the same. This is only for the same taxpayer between their distinct persons. They can transfer. Very welcome move, because as we say, GST is a one law. So if an assessee is having a balance of IGST or CGST in it's two different locations, they can actually transfer. That is only for electronic cash ledger. So this also they want to expedite and bring this amendment as soon as possible. In fact, they can bring this even without states' concern, because this is only to amend CGST and IGST Act, nothing to do with SGST Act. Next, very, very important aspect which has been brought out in the press release is that clarification would be issued on perquisites provided by employer to the employees. Now, it is perquisites provided by the employer to the employees, which is in the course of the employment agreement. Now, this seems possibly to be a very important clarification which department is possibly looking at. We all know that since the time GST got implemented, this applicability of GST on various recoveries, canteen, transport, notice pay, has been one of the contentious issues. So much so that there are advance rulings saying that GST is not applicable, since this being the part of employment agreement. It would be a very welcome move if government actually clarifies this categorically. It would put an end to one very big litigation that could have possibly happened under GST. It's a very welcome move, but we need to wait for the actual clarification to be there. Next, very, very important aspect is the extension of limitation period. As Ashish has mentioned that for the refund, they have extended the time limit. The COVID period they want to exclude, that is from 1st of March 2020 to 28th of February. But then for this particular purpose, that is 17-18, if we see the time limit was January 2023 was the time limit to issue an order. Now that time limit would now get extended to 30th September 2023. In a way, for financial year 17-18, they have extended the limitation period by 8 months. So demands can now be raised up to 30th September 2023. This is, I am talking about normal period of limitation. The extended period of limitation anyway continues. Those time limits will not get touched. Those time limits stands as is. Now, there is one aspect not very clear, which is coming out in the press release, is that certain issues relating to the fake invoicing would be clarified. Now, we really don't know what sort of issues that they are looking at clarifying, but certainly what comes out from the media reports or other things is that we see that in case of this fake invoicing, the charge is being levied on both the sides, that is the supplier as well as recipient. So whether the government can actually make a double collection of taxes in this, issues of fake invoicing, or whether the charge should be restricted only to the extent of penalty, was something not clear. But then we need to wait and watch as to once the actual circular comes. But any good clarification on the aspect of fake invoicing would be very much helpful for the trade, because this is one area where businesses are facing problem both at the suppliers end as well as at the recipients end. Next, very, very important aspect of clarification is interpretational issues under section 17, subsection 5. Now, again, here, there is no clarity as to what exactly under 17.5 interpretational issues they want to clarify. They have not brought out that particular aspect in the press release, but it seems that a proviso which is being provided, whether that proviso for employer to employee has to be read at only for the first entry or for all the entries together, was one of the contentious issues that was taken up in the earlier minutes of the department. It possibly looks that that particular issue under 17.5 would be possibly addressed. Next, very, very important aspect is clarification on mandatory furnishing of correct and proper information of interstate supply and ineligible credits in GSTR 3B. Now, as far as GSTR 3B is concerned, currently the way the information is going in GSTR 3B is a consolidated information, wherein department does not have the details as to what is the breakup of the reversals that have been made. And they also do not have the details of the taxation level at which the breakup has been made for various states. Now, if the ITC is reversed, let's say for IGST, then it certainly demands a settlement between the states as well. So it seems that the GSTR Form 3B would possibly undergo change and amendments. Maybe they would make GSTR 3B more detailed. In a way, it looks like the compliance in GSTR 3B is going to increase. Next is automatic revocation of suspension of registration. Now, this is very, very welcome amendment, I must say, because this suspension of registration, which was brought, I believe, sometime December 2020, wherein Rule 21A was brought that if a particular person does not file the returns for 2 months, then they can actually suspend their GST registration. And this was creating chaos. Then if it is suspended, one has to go for revocation. If the time limit for revocation is over, people were actually approaching high courts. So now what has been brought out is that one important aspect is that if a particular person does not file GST returns for 6 months, it would be suspended automatically. Could be a system generated, possibly. And if that is so, then the moment the returns are filed, the revocation is automatic. There should not be any application for revocation. Let me tell you, all the returns must have been filed, not just 1 or 2 returns. But this is a good amendment in a way that revocation, you need not make an application for revocation. Of course, whether the suspension itself is constitutionally valid is a different question, which we cannot take up as of now. Council has decided to constitute a group for the concerns raised by states in relation to constitution of appellate tribunal. So again, as Madhukar sir pointed out that we are celebrating 5 years of GST, but we do not have GST appellate tribunal today in place. There is already a Madras High Court judgment saying that the composition of tribunal must be one judicial member and one technical member. There cannot be one judicial member and two technical members. So it possibly looks like that the government may not approach Supreme Court and actually go with the decision of Madras High Court and discuss with the states and form the GST tribunal. That's what it looks like, because it doesn't say, the press release doesn't say filing a further appeal to the Supreme Court. It says that if the concerns of the states are addressed, they can actually go ahead with the decision of Madras High Court, which will be a very good and welcome move. Next, very, very important aspect is this renting of motor vehicle for transport of passengers to body corporate. Now, what was happening is that under reverse charge, October 2019, they brought this, if a service of renting of motor vehicle is provided to a body corporate, is covered under reverse charge. Now, there was confusion as to what is the meaning of renting of motor vehicle, whether it is only time-based charter or even a simple voyage charter would get covered. For example, let us say a company actually takes a motor vehicle on rent, wherein the complete control and possession of the vehicle is with the company as to where to ply the vehicle and where to take it, that schedule and everything. That seems to be like a renting of motor vehicle, but there was a confusion as to, let us say if a corporate has booked a cab on a hire, which is a rent-a-cab service, and not renting of a motor vehicle. There's one entry which is a passenger transportation 9964 and one entry renting of motor vehicle 9966. Looks like that anomaly is resolved. If that is the case, then a lot of entities who are actually paying GST under reverse charge for their small travel of employees from office to home or whatever, this thing could actually be avoided, and this can actually lead to saving costs because input tax credit is also not eligible on this. Next is a relaxation for e-commerce operators. Small taxpayers who are supplying the goods through e-commerce operator, let's say Flipkart, Amazon, they had to take registration even if the turnover was less than the 20 lakhs limit. And in fact, they were not allowed the composition scheme. Now, with this amendment, the small taxpayers can supply through Amazon, Flipkart, and this e-commerce operators, and they need not take registration if the actual threshold limit is not crossed, and they can also go for composition scheme. Of course, in our view, TCS should not be applicable in those cases, but interstate taxable supply would not be allowed. It can at the most be intrastate taxable supply. It is a very welcome move. This is what e-commerce operators wanted prior to implementation of GST. Good that they came, at least in 5 years, this amendment has taken place. It would help small taxpayers doing business through e-commerce operators. GST 9A, the turnover limit of 2 crores has been kept intact, so it is not applicable for people below 2 crores. Then coming to, it seems that there is going to be some sort of artificial intelligence and machine learning to look at risky taxpayers, and not just at the time of applying for registration, even post-registration, the behavior of taxpayers is going to be continuously monitored based on AI and machine learning tools. Depending upon, they may introduce biometric system or Aadhaar authentication and multiple things. The only problem is that I hope that this doesn't lead to more of a problems for genuine taxpayers, because we have seen what happened to the risky exporters when DGARM did analytics. It was kiosk. So we just hope that too much of artificial intelligence does not lead to problems for the taxpayers at the ground. Then there is a waiver of late fee. There was an anomaly for composition taxpayer while filing GSTR 4 and CMP 08. Basically, if you did not categorically put a value, it was taking a negative value for which already an extension was given. Now they are further extending it to 28th July 2022. And of course, even CMP 08 filing has been extended to 31st July 2022. And GSTN has been asked to resolve the issue of negative cash ledger amount that is coming out in the form. UPI and IMPS are going to be made as an additional mode of payment. Till now, UPI is not a mode of payment for payment of tax. So I would say these are the amendments which are more of streamlining the compliances have been brought out. I would give it back to Ashish to speak on very contentious issue of this branded goods. Over to you, Ashish.
So we all must have seen the media news prior to the council meeting itself, wherein this GOM for the rate rationalization, there was discussion that government is contemplating or council is contemplating to bring out unbranded goods also within the tax net. So presently what has been happening that, let us say if I am selling any goods, there are certain goods which when sold under the brand name, then those are taxable in most of the cases 5%. But if those goods are not in the branding stage or where the person who has right over that brand has foregone the right over that brand, then it becomes exempted commodity. Though this was the law, but in practical implementation, there were so many challenges. So if I am selling, let us say, a flour mill or any of the item, wherein I just put name of my company. Now the question comes, is it a brand name or not? When I am using it continuously over a period of time. There could be possibility where, let us say, something in North India, some brand has been registered by somebody. In the South, and it has been registered, let us say, in the field of automobile. In the South, one person is making some consumable item and he is using that name because of maybe some kid at his home having the same name. He is not aware whether it is this brand is registered by somebody else or not. There could be possibility that I am selling something from Big Bazaar or let us say more store, where the store itself has that brand, but within that store there are something being sold in the unbranded space. So like this, there were so many ambiguities in the trade as to when it would be construed as brand, when it would not be construed as brand. And this was leading to, I would say, many people either taking wrong tax position or people taking wrong benefit of the law, or in many cases, possibly harassment by the officers also at the field level. In fact, we were in the process of making representation to CBIC in the last week to clarify many of these aspects. Now, what the press council has come out, GST Council press release has come out, it has mentioned that it is recommended to revise the scope of exemption to exclude from it pre-packaged and pre-labeled retail pack in terms of Legal Metrology Act, including pre-packed, pre-labeled curd, lassi and buttermilk. Now here we need to look at some aspect of this proposed entry in the press release. First of all, the distinction what was there between branded and unbranded, that has been done away with. So now whether the product is branded or unbranded does not make any difference at all. Now what would be the criteria to decide the leviability of tax or not would depend on whether that product is in pre-packaged and pre-labeled form, whether it is retail pack, and this has to be seen in the context of Legal Metrology Act. When we were examining this pre-packaged and pre-labeled as per the Legal Metrology Act, so the pre-packaged commodity has been defined means a commodity which without the purchaser being present is placed in a package of whatever nature, whether sealed or not, so that the product contained therein has a predetermined quantity. So I am not aware who is going to buy from me, but for the purpose of selling my commodity, I am putting it in a package, whether it is sealed or not, but it has a predetermined quantity. Label means anything written, marked, stamped, printed or graphic matter affixed to or appearing upon any pre-packaged commodity. So once my packet is pre-packaged and pre-labeled, then there would be tax liability. But the catch is on the terms retail pack. the press release says retail pack. If we look at the Legal Metrology Act, there is the concept of wholesale trade, there is the concept of institutional consumer or the industrial consumer. And whenever, let us say, there are any packages beyond 25 kg or so, those are not considered to be retail pack. Now, a possibility could be there where I am selling something which is in the pre-packaged and pre-labeled form, but the weight is 30 kg. Now, the question will come, will it be taxable under the new regime? If you look at this terminology, retail pack, as per the press release, this may not amount to retail pack as per the what you call Legal Metrology Act. But whether the intention of the government is to give exemption for the higher quantity and not to give exemption for lower quantity, this we would come to know only when the final notification is issued. And the final notification, how do they adopt the Legal Metrology Act? Whether they adopt it only for the purpose of defining pre-packaged and pre-labeled meaning, or are they going to have it for various other meaning from the Legal Metrology Act? Second is also required, would require to be seen whether is it a retail pack or is it that taxability is going to be for all type of pack. So this part is as of now very confusing, but once the notification comes, then yes, we all need to analyze the pre-packaged and pre-labeled and the whether the word retail pack is there or not. If the word retail pack is there, then there could be a different taxability vis-a-vis the term if retail pack is omitted from the final notification. So we need to wait and watch for this aspect, but certainly many taxpayers which either though were not covered in the tax net because either they had surrendered their right over that whatever branding they had with registered with them, or it was no branding at all. So in those situations, now once you get into pre-packaged and pre-labeled, taxes would be applicable in all those cases. So for finer print, yes, we need to wait for the notification to come. Yes, Ravi.
Yeah. So we will now immediately look at certain amendments that have impacting logistics and warehousing sector. So first and foremost aspect is the certain items of storage and warehousing of certain items was exempt, while those items were taxable: spices, copra, jaggery, cotton, or nuts. So it's a more of a corrective amendment wherein it is mentioned that if a particular item itself is taxable, there is no point in giving exemption for storage and warehousing of that item, because this was more of the exemption given for necessary items. So to that extent, the exemption is removed. This would also help the warehousing industry to easily assess the taxation. Otherwise, it was becoming a big challenge for them to assess the taxation. Fumigation of warehouse was exempt, which is now brought under the tax net. Looks like they might have been having issues with accumulation or cost of the input tax credit being taken, which would get netted off since they can charge to the warehousing industry and claim credit. Exemption for rail equipments have been removed when it is transported to rails. Northeastern states passenger transportation, there was exemption, but this exemption was for both economy class and business class. They feel that there's no point giving exemption to business class, which is rightly so, and the exemption is restricted only to economy class. Next, very important amendment is in the context of GTA. Now, in the GTA, currently we know that it is 12% under forward charge and 5% under reverse charge. And once an option is adopted, that is 12% or 5%, it is continuous. There is no mechanism given to change the option once it is adopted. Now, there are two aspects that they are bringing out here. One is that once in a financial year, I would say April, a person can actually shift. Let's say if he's under reverse charge, he can shift to forward charge or vice versa. Now, this shifting can have lot of aberrations and anomalies in the credits, because we need to look at section 18 and 43 to look at the reversal and reclaiming of credit if an assessee multiple times if it shifts. But let us say if there is no shifting. Now, another very important amendment that is brought out is that this GTA is now going to be given an option Within forward charge, they can look at both 12% and 5% category, which means as a GTA, I can supply certain goods at 12%. I can supply certain transportation activity at 5%. To the extent of 5%, the ITC will not be eligible, but to the extent of 12%, the ITC would be eligible. This is very important amendment because industry was facing a problem where some customers were demanding 5%, some were demanding 12%. But this is going to have a large scale impact on the industry. Depending upon what sort of expenses are there, a call needs to be taken. Same thing, renting of truck carriage, like renting of a motor vehicle for passenger, there was a reduced rate of 12%. Similar thing was not there for truck and carriage. Now they brought it even for truck and carriage, where the cost of fuel is included. If not included, then the rate goes to 18%. Next, very, very important aspect is this transport of passengers through ropeways has been reduced from 18% to 5%. Ropeways is a very important mode of transport in northeastern states. Especially, we need to understand that even in case of ropeways, it is not just for tourism, it is actually a means of transport, especially in hilly areas where due to snow or some sort of a storm, if there is an issue with the regular road transportation. Now, the reduced rate was given for the transportation of road on a premise that fuel is used in the course of transportation. In the case of ropeways also, in place of fuel, what is used is electricity, which is a major expenditure, which is also not under GST, and hence this 5% to me, aligning the ropeway transport with the road transport seems appropriate. Next, very, very important aspect is renting of motor vehicle, which has been there. There seems to be a question mark which has been raised as to renting of motor vehicle transportation to be covered under 18%, and if there is fuel included to be covered under 12%. Now here the word uses on time basis. Now, when we look at on time basis means, does it mean that in GTA or in mining projects where on a trip basis or on a use of the vehicle basis for a particular time, currently businesses were not paying GST, treating it as hiring of vehicle or as a GTO, goods transport operator. Now, it looks like in the press release, they kind of trying to say that this is in the nature of renting and would actually attract GST at the rate of 12% based on the another amendment that has taken place. This can have an impact on the logistics sector. They need to revisit their current agreements with the vehicle owners. Next is Nepal, Bhutan. When the containers, the language, the way it was there is when the containers are going, it was exempt for the transportation side, but it was coming from Nepal, Bhutan, it was being considered as taxable because that wording was to Nepal, Bhutan. But of course, it seemed they will clarify that even the container receiving the transportation inwards would also be exempted, because the wording actually says associated transport. So it has to be read in holistic basis. So I'm sure that particular aspect would be clarified. I would hand it over back to Ashish to cover two more important sectors.
Yes. Yeah. So next we move to real estate and infra. So in the real estate, I would say one issue, what was there, the tax rate on the PLC charges also. Maybe next slide, please. So though it was more or less clear in terms of the erstwhile service tax law and also in terms of GST that PLC charges. Maybe next slide. So that PLC charges, whatever are collected by the builder as a preferential location or so. So those preferential charges collected are in the nature of the part and parcel of that main service only. So once it is part and parcel of main service only, then it should be taxable with the same rate. But some of the advanced ruling authorities were taking a view that these preferential charges are separate supplies on which tax has to be charged at the full rate. So now it has been clarified that in case of PLC charges, also the rate of tax would be the same as is with the underlying supply. Second clarification, what has been for the sale of developed plot. So again, that plotting has been a contentious issue, wherein let us say there is some land, and on the land some development is made in terms of the laying of the road or park, club, etc. Now, in such situation, as a builder, my intent is always to sell the land or the plot of land as a sale of land. But certainly it involves certain incidental service also. So the view taken by few authorities, advanced ruling authorities, was that because it is not a bare sale of land, but the contract involved, in addition to sale of land, some development activity also. So it becomes like a civil structure. So there would be entire 18% tax liability, even if it is a sale of land. So whenever developed plot sale, the view was taken that it is liable to 18%. In fact, among the professional, there was more or less an unanimous view that it cannot be said to be a sale of, I would say, provision of service, and there should not be any tax liability on this. On the good note, yes, Council has now recommended or clarified that there cannot be any tax liability on sale of the developed plot. Certainly, we will have to see the finer aspect as to when it would be said to be sale of developed plot, whether when I am entering into agreement at the beginning only and all the development, etc. are taken place later on. Or let us say in the name of development charges, separate consideration is received towards the development charges also. So what would happen in those cases, whether development charges are also or would also being treated as incidental to the sale of land, or whether it would be treated as independent supply. Hopefully the clarification by the Council should take care of all these open issues, so that unnecessary litigation, what is there in this field, that could be avoided. In addition to this construction, there have been some changes related to works contract also. So for the works contract related issues, what the Council has clarified that for certain works contract where the services are provided to the government or the public authorities also, in those cases, the rate of tax has been increased from 12% to 18%. And that is on the understanding that as a contractor, when I am purchasing the cement, etc., at 28% and my other major supply would be at 18%, when I am charging to the government at 12%, so there is accumulation of credit, and that is ultimately where the refund cannot be claimed. It is resulting in the escalation of the cost of the project. So now, in order to overcome that accumulation of credit, all the supplies to the government, where in the nature of canal, road, bridge, etc., monuments, all those supplies have been made taxable at 18% from the existing rate of 12%. Till now, it is not clear how the open contract would be taken care of, because there could be many contracts awarded by the government where everything was inclusive of tax. Now, if the rate of tax has been increased, whether the government would reimburse for the additional tax amount, or there would not be any reimbursement, whether it would be factored into by the contractor, all depends on many times there are the clauses of change in law in the contract. So if there are that type of contract clauses, then probably those could be a savior. But yes, it is going to be very important for all the contractor to evaluate their existing contract, because from the language of the press release, it does not appear that there is going to be any transitional provision for the purpose of the running contract. The similar concept what was introduced in the service tax law. Whenever the first time exemption was withdrawn on these type of activities, the transition was given. But here from the press release, it does not appear that any transition is intended to be given. So these aspects, because the volume and size is going to be used, so all the contractors have to analyze this aspect to understand the impact on their business. Again, if I look at some of the other very important changes, or I would say contentious amendment, have been in the hotel and service apartment. I'm not sure what is the basis of taking such type of view by the Council, but let us look at what two important changes have been proposed in the Council meeting. One is hotel accommodation where the price is up to 1,000 rupees per day, they shall be taxed at 12%. So earlier there was exemption that for small hotel, lodging, boarding, guest house, campsite, or by whatever name called, where the tariff is less than 1,000 rupees per day or equivalent, there was no GST liability. Now the GST liability has been introduced irrespective of any of the tariff amount. That is the first change what they have done. We'll see this impact of this change along with the next entry. Second important change what they have done is exemption is withdrawn on renting of residential dwelling to business entity, where business entity they are saying as an entity which are the registered person. Effectively, typically what is happening in this, presently let us say I do have some residential dwelling which I have given on rent or lease to some other person for the purpose of use as residence. So there is no GST liability. It is an exempted supply in the 12/17. Sometime what happens, let us say I am a landlord. I have a 5-floor building. That building I have given on rent to another company, where that other company is in the business of running the, let us say, paying guest or hostel or similar other type of facilities. In fact, many aggregators are coming online. I would say e-commerce operator are coming in this space. Now, what the council is recommending, that as a landlord, when I am giving that building on rent to the business entity, till now, because it was a residential dwelling for residential use, in the present exemption entry, there is nowhere mentioned that recipient should use it for the residential purpose. It merely provided residential dwelling for residential use. So the view was taken that even if not by that company, even if it is used by the tenant to whom that property is given on rent by that company, so because it is for the purpose of residential dwelling for residential use, exemption was available. Now the exemption is withdrawn to provide that if residential dwelling is given on rent to a business entity where it is a registered person, it would be taxable. So in the same example as a landlord, if I am giving it to the company now, then it would be liable in the hand of, it would be liable to tax and 18%. Now the question will come in the hand of that company who is operating that paying guest or the hostel, where they are collecting some amount from the student also, whether that would be taxable in the hand of that company or not. Earlier, if you look at one safety net, what was taken, that the structure of that premises and the usage of that premises for the residential purpose. Once that structure and usage of that premises for the residential purpose, because it is a residential premise for residential use, there is no liability. So on the PG, co-living, etc., no tax is being charged. Second safety net was taken, even if let us say it is said to be that it is not a residential dwelling, still tax is not applicable, because in the first entry where up to 1,000 rupees per day exemption was there. So in that situation, that exemption could have been claimed, saying that let us say 10,000 rupees are the per month charges. So it would be certainly less than 1,000 rupees per month. Now the question would be coming that as a company, when I am giving on rent to the students or PG occupier, if a view is taken that it is not a residential dwelling, but it is in the nature of or equivalent to hotel, camp, campsite or guest house, in or similar other name called, because that entry is very big, and because now less than 1,000 rupees is also taxable. So if it is brought under that entry, it would become taxable. We need to see how the government comes out in the particular entry, because otherwise it is going to be a chaos in the entire, I would say, education sector. And the people, normally people staying in these type of facilities would always be low earning people. Second could be that not only this, let us say I have taken a flat on rent for myself, where I am registered in my individual capacity. Now the landlord who is giving that residential dwelling to me, because I am the registered person, he has to charge GST on that, or that transaction would be subject to GST. Now the rent, the flat what I am taking on rent, how would the supplier know that I am registered or not? How would he get that information? So I would say there are so many associated questions with this particular amendment. There could be many times the companies where they take the guest house or the apartment for their expatriate employees or other employees, where the contract clause normally provides that it is to be used for the residential purpose. Now, because it is used for the residential purpose, landlord does not charge GST. Now, because it is taken by the business entity, it would be subject to GST. And there could always be the point that it is intended to be used by the or residents of the employee. So it is for the personal usage purpose. So input is not available under 17.5, though there are counter argument also. So certainly I would say many of us have to analyze this entry once the exemption notification, what the changes are made as to what repercussion it could have in the entire industry. Other change with respect to this hotel and tourism sector is that, let us say, when I am an Indian tour operator and I am booking it, I am providing tourism service to some foreign resident where he is coming to India and he is going to, let us say, some other neighbor countries also. So in that situation, presently I need to charge tax on the full value of my supply. Now, because I am charging full tax on the full value of supply, but there could be other competitor tour operator outside India. If that foreign national is registering it through that foreign tour operator, there would not be any GST liability. So here, what the I would say concession is going to be provided, that if an Indian tour operator is providing booking of tour services to a foreign resident, then to the extent the charges pertain to the tour to be made outside India, there will not be any tax liability. To the extent charges pertains to tour made in India, there would be GST tax liability. How it would be worked out based on the number of days spent or based on the actual booking charges for those different countries and all those things, that we need to see when the final blueprint of, I would say, this exemption entry comes out. So this were in the hotel and service apartment. I think we are almost at 6:20, maybe another 2-3 minutes we can close on the part, and then we can probably take the question answer.
Yeah, we would like to give more time for Q&A. So what I would do is quickly take up only important aspects of the amendment, and we can then take up questions. I think in the healthcare, one of the most important amendment is in the context of hospitals. Now, we all know healthcare was not a part of GST all along, but now the hospitals, where the room rent exceeds 5,000 rupees, has been brought to tax net. Now, one important aspect we need to understand is how do you segregate or how do you bifurcate something which is naturally bundled? When a patient is to be admitted to a hospital, can he make a choice that I want room, but I don't want healthcare service, or I want healthcare service without a room? I don't think so. These are very closely bundled, and unbundling this could lead to all the issues, and the fundamentals of composite supplies would be disturbed. But this taxation, in my view, would be challenged. They did not did it in the way they did it for hotels, where if the category of room is above 5,000, it will be taxable for the entire service. It's not in that way. It is only for the room rent specifically they are trying to extract and levy taxation, which would be challenged. There's already a lot of judgments. Gannon Dunkerley, where it was pointed out that giving a medicine to a patient in the course of healthcare service is not sale of goods. Cord but blank sales, stem cells and all, for affluent class, they have not. IVF is very important aspect, where IVF, there was issue whether it is healthcare service and exempt. They've clarified that it is exempt. Biomedical waste has been treated as equal to affluent treatment. Few important clarifications. Let me only take up the important ones. Ice cream parlors, they have mentioned that it would be at as sale of goods 18%. For people who have did it as a service, they are going to regularize by way of some sort of regularization scheme. Then electric vehicle, there was an issue where if it is not fitted with the battery, still whether you call it as an electric vehicle, so it is clarified that whether or not fitted with the battery, it would still clarify as electric vehicle, and the concessional rate of tax would be applicable. Few rate rationalization aspects where the rates have been increased, and the justification given is very simple, that it is leading to inversion and that's why the rate is increased, which need not be the case. As Madhukar sir explained that 5%, if inversion was the case, then 5% need not be made 18, it could have been done as 12. So these are the various industry or sectors that are going to be impacted with increase in rate. Very rarely 1 or 2 entries we see that where the rates have been actually reduced. Only one big amendment in the rate change which I see is this cut and polish diamonds. It is going to impact jewelry sector heavily because diamonds, this cut and polish diamonds, not as a part of jewelry, as a loose diamonds was under 0.25%. Now they are brought under 1.5%. So it seems 1.5% is a new category of rate that has been created. We all know that earlier, every time there was an increase in the jewelry sector, there was a big issue among the industry. So this, I'm not sure how industry is going to take that. Then there are, I would say, some ancillary amendments with respect to rate change, which can be, you can have a look at it. This presentation would be shared. We might have missed out some important amendments. Of course, we tried to cover all major amendments impacting sectors. So if it is so, you can please put it as a question. We'll try to answer. We'd like to thank Taxsutra for a quick session on this topic. So over to you, Tanaya.
Any comments or input by Madhukar sir?
Yes.
Sir is on mute.
I have a few comments, but I think we'll take the questions of the people because that may be more important. Any of the things what I think Ashish and Ravi have done a very good job, so I don't see much.
Okay, sir.
We'll take questions, and if we have time in the end, you tell me. I have about 5 minutes. I can try and give some thought process.
Thank you, sir. Thank you so much. We do have a couple of questions. The first one is that refund of accumulated ITC is not to be allowed on flowing goods like edible oils and coal. So the question is, sir, in the above entry, is the intent to remove ITC on edible oils and coal in computing the eligible ITC for an exporter? Or is the refund not allowed when you export edible oils or coal?
So I think final will come to know once the clarification is made. But if you look at the place where this restriction is placed in the press release, they have placed it under the rate rationalization to remove inverted duty structure. So it appears that as an edible oil dealer or coal dealer, if there is some accumulation of credits, normally there should not be accumulation because what I'm buying only I'm selling. But maybe some of the packing material or some other expenditure could be there, which could be leading to this accumulation. So it appears that this restriction is only for the sale or refund under the inverted structure, not for the exporter or so. So as a, let us say, manufacturer of steel item, if I'm using any coal and I'm exporting that finished goods, or let us say I'm exporting coal per se or edible oil per se, that restriction does not appear to be under Rule 89 for the purpose of LUT export.
Okay, sir. So the next question is warehousing services provided to FCI for storage of wheat and paddy taxable?
I think that would, earlier the exemption, we need to look at that exemption. I don't think it covered wheat and paddy. But then again, it all depends on the taxability of that wheat and paddy. So if those items are taxable, then the warehousing also would come under the tax net. Otherwise, it would not come under the tax net, which would again drill down to that pre-packing and labeling related aspect.
I'll comment, Ravi, on this. So I've handled this case. So wheat and paddy, if you look at this warehousing entry in the exemption notification, there are 3 entries. One entry pertains to storage or warehousing of agricultural produce. Second is the storage or warehousing of these specified commodities wherein they have removed some exemption. And third is the storage or warehousing of rice or minor forest produce also. So in that context, if you look at this storage or warehousing of rice or the wheat, where it is provided to FCI, because it is always going to be unbranded item or not in the labeled or pre-packaged form. So those appear to continue to be under the exemption notification, but certainly final view to be taken only when this exemption removal entry comes out. Yes, Tanaya.
Right, sir. So the next question is with reference to the GTA service. If the GTA pays 5% on forward charge, the participant says, in my view, there will not be RCM on the recipient. So the participant is asking, is my understanding right? The recipient will still be eligible for 5% credit paid by the GTA.
Correct. This understanding is correct, Tanaya. Forward charge, they can go for 5%, and the recipient should be eligible for input tax credit.
There will be dispute, but dispute will be there from the department that the recipient should have paid under RCM. But legally, it is that thought process of the participant is correct.
Okay, sir. So the next question is, group of 10 individual owners of a minor piece of land combine together the rent to the corporate. So is this liable to tax, whether forward charge or RCM for recipient?
So, what I understand the question, there is a piece of land wherein I would say there are 10 adjacent plots, where those 10 adjacent plot or piece of constructed property are jointly rented to a company. Now, those individual owners might not be registered under GST, might be registered under GST. Now, the first question is it liable to GST? So, if I look at answer to this question, yes, under the revised entry, if it is a residential dwelling, because earlier non-residential was taxable already. If it is a residential dwelling where it is given to company, yes, it would be liable to tax. Now, the second question, whether it is liable under reverse charge or forward charge, that is certainly not coming out from the press release. But what I feel, like in terms of JDA contract, joint development agreement, where the landowner is giving any development right to the developer, the tax liability is not on the landlord, tax liability is always on the developer under the reverse charge mechanism. Now, because in many of these cases, the landowner may not be in a position or may not be already registered, because a person would have purchased some flat for, I would say, investment purpose also. So in those situations, this could possibly be taken under the RCM. If not taken under the RCM, many of the supplier would be below threshold limit. So it would anyway remain under the exemption. So if the intention of government is to collect the tax on this, probably it could be under the RCM, applying that analogy of the development right given by the landowner to the developer. But yes, we need to wait for the final notification.
Right, sir. So the next question is, wheat bran had been tax-free till date. So did the last GST Council meeting impose tax on wheat bran?
So in this minutes is there on wheat bran.
So there is no specific reference of wheat bran. Only thing would be if it comes into that branded, unbranded item, where let us say if branded was taxable earlier, unbranded was not taxable. If in case it was falling in that classification entry, then the change would be, if it is pre-labeled, it would become taxable. But if per se, if commodity is exempt, there is no change in the tax treatment.
Right, sir. So the next question is, the participant is saying that in the definition of the Legal Metrology Act, the institutional buyer is someone who is consuming directly. So if I sell to a trader who in turn sells to a bakery who is an institutional buyer, will it attract GST?
As I touched upon, it would be premature to comment on any of these complicated aspects, because the term used there is the pre-labeled and pre-packaged retail pack. Now, the retail pack, how would that be construed, whether retail pack is going to be there in the final notification or not? To that extent, there certainly exists uncertainty. So at this point, I would say we would avoid to answer this question so that there is no confusion.
So the next question is, wheat products such as maida, suji, atta, if unbranded but packed in consumer and wholesale pack, whether it is taxable or not?
Same answer what I had given for earlier, because the word retail pack, whether it is going to be there in the final notification or not is going to make a difference. But let us say it is a 10 kg product, for example, 10 kg wheat, atta, pre-packaged form, unbranded. It is certainly going to be taxable. But if it is, let us say 50 kg, more than 25 kg, there is certainly some ambiguity as of now.
So then do we have time, sir, for more questions?
We can take.
Okay, sir. So the next question is, in case of GTA services, if the service provider does not pay the tax and the recipient is to pay under RCM, please clarify if the recipient is unregistered, on whom the GST burden would be applied.
If the recipient is unregistered. No, again, see, there are two aspects here. One is that if the supplier is opted for forward charge, then it would be on the supplier only. But if the, let's say, recipient is unregistered, I understand there is one exemption in this context, wherein if it is to an unregistered party, the transportation of service is actually exempt under 12/2017. So I don't think recipient would have to categorically register for this purpose for paying the taxes.
Yes, so I think that exemption would continue both under the FCM as well as RCM.
Right, sir. So the next question is, we are registered under GST. We are taking building on rent for keeping our employee. So whether we will be liable to pay GST to our landlord.
So this transaction would be liable to tax, whether under the forward charge or reverse charge. As I commented earlier, we have to see the final notification.
Right, sir. So we have many more questions. Do you want me to continue asking them?
We can take up 3 more questions, Tanaya, and then we can hand it over to Madhukar sir for final remarks.
Okay. Okay. The next question is, sir, we are hiring taxi, sir, with reference to taxi hiring charges, if we are hiring a cab without fuel and the operator is RCM applicable, if recipient is body corporate.
Ravi, will you answer this question?
What is the question, Tanaya? I didn't get the question. So whether it is taxable, that's the question?
Right, sir.
Okay. So again, if it is without fuel also, then the tax rate would be 18%. But here only aspect is whether it is a renting or hiring. Now renting is where the complete possession and control of the vehicle would be with the body corporate. Let us say many times for this expats, this Mercedes or something would be given on a proper rental leasing arrangement. In those cases, it would be under RCM. But if it is merely hiring arrangement, let's say just pick up drop from one location to another location, not a time basis charter, but simple a voyage basis, there it seems that it would not be taxable under RCM.
Okay. The next question is, new manufacturing unit wanting to sell its products through e-commerce operators supplying within the state. So the question is, there is no mandatory registration, right? Like they want to ask.
That has been removed now. That relaxation has been given now.
Okay. So should I take the last question then, Ravi?
Yes.
It says, we are OEM and all our goods leave from a vendor to our customer. We are issuing e-invoice since inception. So is it compulsory to issue all our purchases should have e-way bill from our vendors where threshold is less and all our sales need to be covered with our e-way bill? So department is issuing notice stating that this has escaped from tax.
This question is not in the context of this particular amendment, but still I would say e-way bill is matter of litigation which is happening, and merely because e-way bill is not there, there cannot be a issue coming in now, because that can be only at the time when the vehicle was in transit. So and again, the taxability must be on the person, or the penalty must be on the person who is having the obligation of generating the e-way bill. In this case, it is your vendors and not you. So I don't think that issue should come.
Okay. Actually, Madhukar sir, has logged off by mistake, unfortunately. So I think he would not be able to do the closing comments. Would you all like to do the closing comments in that case?
Yeah, I think maybe some network problem at Madhukar sir's end.
Right.
Ashish?
Yeah. So I would like to first of all thank all the participants for joining in such a great number and remaining in the session. Hopefully, yes, we know certain constraint at our end because the final prints are not available and timing constraint. We have tried to explain the things in the simpler and lucid way, and hopefully there has been certain value addition from the speaker side. I would like to thank Taxsutra and Hiragange Academy for giving this opportunity and organizing this program at the so early after the press release. And special thanks to Tanaya for moderating this entire program such wonderfully and putting across all the questions of participants. So once again, I would like to thank everyone. Happy CA Day and happy GST Day. Thank you.
Thank you so much, Ashish sir and Ravi, for this wonderful session. Many thanks to Madhukar sir as well for so gracefully imparting his wisdom to all of us, that too at such a short notice. But thank you so much. It's always a pleasure doing these sessions with Hiragange Academy, and I think it was truly a riveting session. We received many questions, and it was quite lucidly, the session was quite lucid. So thank you so much to both of you and to Madhukar sir for delivering this session for us, and we look forward to many more sessions in the future with the Hiragange Academy. Thank you so much.
Thanks a lot.
Thank you.